Hello, Maverick traders. Welcome out to your market roundup. It's July 15th. Corey here with you. Nice to see all of you. Let's jump in. So we always take a look at meaningful news. We look at the broad markets. We look at sector rotation. And then our goal is to ultimately highlight the very best bullish, neutral, or bearish ideas possible.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So we're continuing to see a broadening of this rally, which is very good news for the bull market. The Dow, S&P, NASDAQ all up about 0.5%, but the Russell 2000, those small caps that have been left behind for a couple of months, boy, are they coming back strong, up almost 2% today. Oil and gold flat, but it's this broadening out of the rally. So remember, we've looked at IWM, we've looked at RSP, which is the equal weight S&P 500. Both of those have zipped higher, sharply higher, and really it's the majority of stocks. When you look at the stock market, when you look at the equal weight S&P or IWM, that's the majority, and so the majority is really taking off. Actually, the large cap tech has kind of struggled the last couple of days, but this is very good news if you want to see that bull market continue. Over the weekend, we had Trump assassination attempt. Today, he picked his VP, J.D. Vance, out of Ohio, so some market moving news there. Advanced decline line, 50% of stocks, well, 56% up today. And the 50-period moving average, you can see that improvement. We now have 70% of stocks, and it's all happened in the last couple of days that this has really broadened out. So as you look at the S&P 500, you look at the last 3 days and you kind of say, well, we've gone up a little bit, but really, again, this is a little bit of a misrepresentation of what everything out there is doing. This is so heavily weighted towards Apple, Microsoft, and those names that kind of move together. So the S&P, the NASDAQ, and a little bit of a consolidation, but the majority of stocks have really had a nice run this week. And we know that in talking to our traders, it's been a little bit of a difficult environment because even though we had a bull market, it was like so many things were not participating, right? You had to be in NVIDIA. You had to be in some of those very specific names. Otherwise, there were some things going up a little bit, some things going down, but it was really a sideways market. If you pull up a chart of RSP or IWM, which is here, here's IWM. This is the majority of stocks looking at, 2000 in the Russell small cap index. And we were going sideways to lower. So we had this bull market, but yet most stocks were not participating. You can see how that's changed. So some of those bulls that had lagged, that had underperformed, are really starting to take off here. The problem for traders would be, of course, if you were buying a lot of bullish positions back here that have already run out of their expiration date. You just were not operating in a truly bullish market environment. And it's important to kind of understand, I've tried to emphasize that a little bit in these market roundups every week, is that the S&P gives you this sense of a bull market, but the majority of stocks were not participating. So I kind of called it, well, a little bit more of a sideways market environment for most things. And sure enough, that has turned and turned violently higher. So hopefully you were able to capture some of that as this broadening out of the rally has occurred. And so now we're finally starting to see green in some of these other sectors. Energy, financials, very much in the green. You can see industrials over here with some pockets of strength. So the broadening out of the rally, some of these sectors that had underperformed, that had been left behind, are really starting to take off, and that's very good news. So still bullish, S&P index still going up. We've got no problem on the broad market index level. And then obviously now we've got 70% of stocks above their 50 MA. So let's look at some bullish and bearish candidates. I've got a few different names that we can take a look at here. Palo Alto Networks, This is consolidated up near the highs, high basing after a breakout. That's the good news. And I suspect I would just play it, not overthink it, play it to the upside. Now, if we're looking at a risk graph, you could just play this with a simple bull call spread. A bull call spread would give you a risk graph that would look something like this. As long as the stock goes up, we're in the profits. If the stock were to go down, of course, we'd fall into the losses. And I wouldn't be too aggressive with it, but a move up towards about 350 per share, thereabouts, seems very, very easy pickings for that type of stock. And then one that I probably like even a little bit better, Uber. You can see this basing pattern that it's been in the last couple of weeks, and we're right at the top of that. Again, I think we could break out to the upside, a move up there. I'm going to call it 75, 77, somewhere around that level seems likely. You can take the size of this base, and you can see the top is right around 73 and the bottom's around 69. So if you've been basing in a 4-point range, a measured move would say, well, if we went 4 points higher, from 73, you'd go to about 77. So again, that's kind of my upside target of where I think this could be in the short term. On the bearish side, here we've got Starbucks. Starbucks had the big gap down on heavy volume. It was able to work its way back up, and then we plunged back down. And so notice how this support level has now been retested. And now we had a little bounce, and we're starting to plunge again. This would be called an inverse cup and handle pattern. You basically have the big bounce from support and then the small bounce off of support. So not great for Starbucks. This gives a bearish outlook. Minimum price target here. Again, if you take the small base, you can at least move down to about $69 per share. And if you take the bigger base and you're looking at long-term projections and so on, we could even get down into the low 60s and such. But first things first, I think 3 to 4 points down in the short term seems like where this is headed. So Starbucks with that inverse cup and handle pattern, you got the big bounce, the retest, and then the smaller bounce. And if you wanted to do the math on a cup and handle, you basically take the bottom of the range, which is 72, the top end of the range, which was about 83, the difference there being 11 points. And since the cup, this is an inverse cup and handle, right? It's like the big saucer kind of flipped upside down on the table. But since the cup is 11 points, the handle should be about 30% of that. And 30% of 11 points is 3.3. So from a bounce of 72, you should bounce up to about $3.30 above. That's about 75.30, which is just right at about where we stalled out there. You see how that kind of works, like it's not an exact science, but it works like clockwork essentially, that you get the big bounce and then you get the smaller bounce, and right up against that level, that 75 and change, is exactly where it started to fail. So just really looks great on a technical basis. Small caps and equal weight have broken out. There's still some things lagging, so you can still find some bearish candidates, but the majority of stocks are now clearly trending upward. We've got retail sales on Tuesday. Tomorrow we've got earnings reports out of Bank of America, PNC, Morgan Stanley, United Health, and then there's a lot of other companies reporting Wednesday, Thursday, Friday, and such. So plenty to keep us busy on the earnings front. Hope you enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.